Hello and welcome to an all-new episode of Perspective right here on the CryptoCast Network. Thank you, ladies and gentlemen, so much for joining us again on this beautiful day. We have lots to talk about. We have Mr. Hass McCook here, but before we introduce him, we are screen sharing our website here at CryptoCast.network, where you can find our YouTube, Twitter, Instagram, iTunes, and RSS feeds. And of course, we have our merchandise on there for you guys to share to support the show. And we are screen sharing our QR code because this is a community supported YouTube channel. So we really appreciate all the donations and all the feedback. And then we're going to, of course, shill Mr. Tone Vase's conference coming to Las Vegas, Nevada, January 24th through 26th. It's going to be pretty great, guys. It's a Bitcoin, not blockchain conference. I'm pretty excited about it. It's going to be all the great Bitcoin people. We got Tone Vase, of course, Jimmy Song, Safety, and Max Kaiser. It's Peter Todd, Trace Mayer. There's going to be a lot of great people on there, even Giacomo and Willy Woo. So some good Bitcoin maximalists on there. They're going to be doing workshops, all sorts of good stuff. And I think there is now 22 tickets left at 0.1 Bitcoin a piece. So check that out, guys. I'm really looking forward to that because, it's like some of these other conferences out there, the Breaking Bitcoin and some of these others that are just Bitcoin, not blockchain. So I'm pretty excited about that. So with that aside, let's stop the screen sharing and introduce our special guest this evening, ladies and gentlemen, Mr. Hass McCook, a chartered civil engineer and MBA from Oxford. Hass, how you doing tonight?
I'm doing very well tonight. Monday night over your way, Tuesday morning over my way. So having a pretty good start to the day so far.
That's awesome, man. Yeah, that's how we do it on the CryptoCast. We are global, of course. We try to interview as many people as we can from the community, regardless of where they are. So thanks, man, for joining us. I think we're going to have a pretty good discussion tonight. We got a lot of stuff to go through here. We're going to be discussing your article here, the cost and sustainability of Bitcoin. And, I think it's a really timely discussion to have because we just had that recent 15% difficulty adjustment down, and there's some talks around Twitter, of course, about the death spiral again. We've seen these talks before, back from the halving, back in the halving days, back in just about every time we have a big price correction, people start bringing up the death spiral, thing again. So I want to talk to you a little bit about that, and then we're going to get into the article, sort of break it down section by section. But let me ask you first, Hass, what was the the idea behind writing this article? What was the reason for it? Maybe you can share with the viewers and the audience your thought behind why you wrote this article, and then we'll get a little bit into a little bit more detail after that. So go ahead.
So I originally had a look at this area of interest, cost and sustainability, all the way back in 2014, and the motivation really was just to start fighting some FUD. A lot of people talking mess about Bitcoin and how damaging it is to the environment, and it's a scam, and it's this and it's that. So I figured there's no better way to rebut this than with a absolute information thunderstorm. So plugged away at it, left it alone for a couple of years, and when the environmental FUD started rearing its ugly head again early last year, I thought I'd have another crack. Update the report, update the assumptions. Obviously, 2014 data was sparse, to put it lightly. There's a lot more data available now, so it's much easier to form something a little bit more robust. But obviously, still a lot of guesswork involved in trying to figure out mining cost and what the environmental impact of Bitcoin is. But I feel I've had a pretty good stab at it, and I suppose we'll talk through the findings over the next hour.
Yeah, absolutely. I mean, I think that this is just extremely important, and not just timely, but just don't have really good methodologies for calculating the cost of a price of Bitcoin, how much it costs to mine. And this is really important to go into because as you've done in your article, once you really start digging, you go through the whole thing, which is, environmental and economic and all the way through. And so you really start, a lot of truths start becoming very apparent about Bitcoin that are the complete opposite, of course, of the FUD that we hear in the mainstream media. So that's really great. I'm really excited to get to this methodology here, but let's just ask you a couple questions real quick. So Hass, what is your opinion on this whole death spiral narrative? What do you make of it, and what are your comments to it? What is your comment to it before we get to the article?
Oh, I think it's people being a little bit too sensitive. The FUDsters getting a bit excited. There's no such thing really as a death spiral. I don't think it's. Really, I think it's effectively just market FUD. It's a bear market, and people trying to just shake out weak hands by saying, "Yep, difficulty's dropping, Bitcoin's going to zero." But in terms of fundamentals and how mining dynamics actually work, things will sort themselves out in a couple of different cycles. Like we experienced this price shock only 2 weeks ago. So most of these mining companies probably haven't even had their board sit around the table and discuss strategy yet. So it's only been 2 weeks. People just need to be, a little bit patient and see how things pan out. There's too many people with skin in the game to let a death spiral precipitate.
It's kind of funny when you take back, some of these people don't really stand how many actually people are in Bitcoin. I mean, we have some of these figures, of course, and you outlay some in your article. I mean, we can gauge some assumptions from numbers from Coinbase and things like that. But roughly speaking, 50 million people is sort of what the general 20 to 50 million people is sort of what the general assumption is right now. But I just think it's way more than that, way more than people understand, because again, it's the pseudonymous nature of Bitcoin. It's impossible to ever tell the exact amount. But I tell you, this is the writing on the wall at this point after the 2017 run up. I mean, all the billionaires in the world are just circling, I think, right? It's just circling that price, just waiting, to get in or to I can't even talk tonight. Cost dollar average in. There we go. Cost dollar average in. And I think, this is, it's just really, really, really apparent. People are like looking at, what people don't understand too is they look at the price and they think, oh, okay, so now that Bitcoin is is 6,000, it's worth less than it was last year. But it's like, wait a second, no, guys, that's just the short-term price cycles. The actual fundamentals, of course, and the underlying is what you get into in the article here, of course, has only gotten better. So let me ask you this, Hass, maybe you can share just real quick some of the major differences or some of the major changes or some of the new things that have come online since your 2015 article. What are some of the main differences that you find now in the ecosystem itself that you're basing your article on? What are the main differences between that and the 2015 era?
The main differences is basically more clarity over data. So back in those days, everything was shrouded in mystery and secrecy. You couldn't figure out which mining company was selling what kind of mining rigs. The industry just wasn't mature and consolidated enough, and really it was the Wild West back last time I did my research. So to put things in perspective, I think the last time I did my research, ASIC miners had only been around for about 3 months. So there was actually still people mining with their GPUs on the network. So the transformation that the industry has experienced over the past 4 years is quite monumental, and you can see that just by last year's sales figures. So I think all of I know the Bitmain's numbers, and Bitmain had, I think, like 85% of the market, and they made something like $2.5 or $3 billion worth of sales. So it's getting pretty serious. So back in 2014, when I did the research, Bitcoin was worth, it was a $10 billion market cap industry, a true minnow that could be kicked around by a couple of big whales very, very easily. So it still gets kicked around by whales, but not as easily as before.
Absolutely, yeah. I mean, it does. We're reaching the OTC market of gold, actually. Like the amount of liquidity that Bitcoin is doing per day is starting to actually reach the OTC market of gold. In fact, I think it was surpassing it there for a little bit, but now, of course, we're down a little bit now in this bear market. But it's very interesting to see how quickly it can catch up to these traditional things, some of these traditional assets in just a really short amount of time. So let me ask you this then. So the audience knows the article is broken up into a few categories, and we're going to go through them one by one. But I just wanted to give a couple of statistics here based on your article. It looks like since 2015, some of the major differences, like I think we've seen the dollar per gigahash go down 94%. I think we've seen the wattage per gigahash goes down 89% as well. And I think you said that the hash rate now has actually increased from 2015 to now 14,300%. So I would use the word monumental. I think that would be a good word to use that you used there.
Those are August figures. So now with the new Antminer S15, dollar per gigahash, I think is down now like 97%, not 95. And watt per gigahash is down like 95%, not 89.
So
So like
let's
this thing moves very quickly. Like you can't write a report and have it be accurate for longer than a week or two.
that is funny. That is really interesting. That is just the way that Bitcoin, that's the nature of Bitcoin and how with the difficulty adjustments and everything and how it's changing and the price. That's just the beautiful thing about this global, decentralized, dynamic technology that sort of nobody has control over. So let me ask you this, Hass. Let's not tease the audience too much. Let's go ahead and give them what your current calculation is of a price per Bitcoin, and then we'll go into the first section, which is the Bitcoin and macroeconomics, and I'll share the screen for the users to see that. But go ahead, Hass. What is the current price to mine a Bitcoin?
So, well, it's an average cost and it's a stab in the dark realistically. But for those that have been following me, if you were to use my exact same assumptions from August, which is quite risky to do because it's not August anymore, but let's say to use the exact same assumptions, average cost to mine is about $4,200. But if you change one of those assumptions, and it's a key assumption, which is the forecasted epoch capex spend, as in how many how much more hash you want to put on the network. My original assumption of 7% increase every fortnight is a little bit too ambitious. As we've seen over the past couple of months, hash rates are back to July level. So if you drop that forecasted fortnightly capex spend from 7% down to probably a more realistic 4%, you're looking at about a $3,000 cost to mine. So we're still pretty far away from a death spiral. Miners are still making money. So I don't see a death spiral at all. So maybe, your little retail miners, people that have got a, 100 terahash or something pumping out of a small data center, maybe they're starting to switch off. But the giants, they're still going okay. And effectively their expense is now purely OPEX. Not many people are putting new rigs on the network. Otherwise, we would have seen that reflected in an increasing hash rate.
Very interesting. Very interesting. And now, the actual model and methodology, of course, that you use to calculate that is all up on the website, guys. We're going to share that article in a second. We're going to go through there right now. I highly recommend everybody to check this out. I don't think, guys, that Hass has got enough views, like enough attention on this stuff. I mean, some of the videos only have a couple hundred views. This is just there's not enough people in the world working on this problem, which is this problem of trying to just logically figure out what the price of Bitcoin is based on all of this information. And there is a lot of information out there. This is something that will benefit, in my opinion, this is something that will benefit the economy and the ecosystem as a whole. Once we start to dive into more of these research papers, more of this understanding of what makes Bitcoin and how much it costs to mine a Bitcoin, because you start to find out, guys, again, that a lot of these truths come out that just is the quite opposite of the FUD once you start to dig into this data. So let's dig in a little bit. Then Hass, I'm gonna while you give me a sort of a general overview of the first section, I'm gonna start sharing the screen. So go ahead and let's go into the first section of Bitcoin macroeconomics.
Okay, so in terms of macroeconomics. Macroeconomics doesn't really, it's very difficult to look at Bitcoin macroeconomics from a traditional lens of macroeconomics that people are used to studying about, simply because there's no central authority setting monetary policy or anything like that. So it's very, very difficult to look at macroeconomics from Bitcoin's point of view. And effectively, macroeconomics is out of the control of the majority of miners. What do we got here? And
I'm on the wrong one. Let me go to number one here. I got to find. There's so many. That's part two. I got it. We got to find part one, guys. Hold on. Let's see here. Let's go to part one, all the way down here. There we go. Sorry about that. Go ahead and continue.
So the macroeconomics is probably the least interesting aspect of Bitcoin mining. So it's effectively just setting the context of where Bitcoin operates. So in the global macro economy, you've got every government, every business, all of that kind of stuff, and you can almost call it sort of the analog global macro economy. So when crypto was invented, a totally brand new sort of digital macro economy was formed that both runs in parallel to the legacy analog one, but also kind of depends on it, because Bitcoin succeeds when global macroeconomy starts to fail. So in terms of the crypto macroeconomy, you've got several subsets within the macroeconomy. Collaborators, competitors. You've got very a varying amount of service providers, exchanges, brokers, miners. So it is a big burgeoning macroeconomy, but it's still small and fragile. So it's almost the same size as a traditional microeconomy.
Very interesting, very interesting. So that basically the first part is really sort of dividing the macroeconomics into sort of three sections, right? So like the three sort of axis of competition, I guess you could say, which is the global macroeconomy, the macroeconomy, and then the microeconomy. And you're saying basically that this global macroeconomy sort of is mostly digital when it comes to Bitcoin. And it's sort of, I think you even said, sort of split into two, actually, once Bitcoin was invented. We sort of have this, we have the traditional financial system, and then now we have this Bitcoin and crypto ecosystem that is effectively
the legacy one, the analog global macroeconomy,
yes.
and Bitcoin, the new digital one.
Gotcha. Okay, that makes sense. So
even though the analog system runs electronically, because all of our money is just numbers on a screen in a bank, I'd hardly say it was digital.
Very true, very true. And also, I just want to remind the viewers too, as we screen share this article, that Hass has produced a video series as well with this article series, and he actually has little 3 to 10 minute videos here, 10 of them total in a video series, and they're all perfectly digestible and accessible to anybody, to all. He goes through and puts all the stats of the article in there, explains it really nicely, and so I really recommend everybody, if you guys are going to check out the article, if maybe you don't have a whole lot of time, maybe check out the video instead. It's just a quick 2 or 3 minute video, and there's one for every section. So I just wanted to remind the viewers of that. But I think we can move on to now the second part, which is the perfect competition.
Oh yeah. So I'll put a disclaimer. There's no such thing as perfect competition. It's very theoretical, but for the people like me that don't have an economics background, explaining things from a perfect competition lens just makes everything easy to digest. So it's nothing is ever perfect in real life, but we can use perfect competition principles to try to form strong, robust assumptions. Now, with that said, and saying that there's nothing perfect in this world, from everything that I've seen, I think that the closest thing in the world to a perfectly competitive market is Bitcoin. Now, the reason for that is there's a certain criteria that you need to fulfill to sort of be a perfectly competitive, microeconomy or market. And effectively, those 9, there's sort of 9 things that I've identified. First one is a homogeneous or identical product, which Bitcoin is. A Bitcoin is a Bitcoin is a Bitcoin is a Bitcoin. The second criteria is guaranteed property rights, which your property is guaranteed by the blockchain. Another criteria is 0 transaction costs. Now, there's no such thing as 0 transaction costs. There is Bitcoin is very near 0. A lot of people, a lot of trolls would have argued that no, I had to pay a $40 fee to get a $3 cup of coffee. But these things are temporary, and in the long term, Bitcoin is trending towards 0 transaction costs, as we've seen with things like the Lightning Network. And I must say, I'm extremely excited for Lightning. There's a lot of people doing some great work on that front. You've got Casa with their plug and play node. You've got Pierre Rochard doing some fantastic work on sort of plug and play. Download and install file, and off you're up and running with a node in a couple of minutes. So eventually, we probably will have extremely near zero cheap transaction costs.
Yeah, just a side note on that. I mean, the Lightning Network is it's really amazing. People who follow me know I've been tweeting about it all the time. I retweet all sorts of good stuff about the Lightning Network. You know, it really is this amazing order of magnitude scaling solution for Bitcoin. And I really think that it is going to be this sort of interoperable application layer that sits above Bitcoin and all of the other blockchains and can actually connect all the blockchains together. I think that that's going to be a big part. You know, obviously Bitcoin being the main one that matters, but if you're going to plug into the crypto economy, you're going to have to, in my opinion, plug into the Lightning Network, which then allows you to plug into Bitcoin.
Definitely.
Yep.
Definitely, and it is imperative for Bitcoin's growth. Absolutely imperative. But as time moves on, like Rome wasn't built in a day, as the cliche goes, things are getting better and better every day. And it's like you shouldn't judge. A lot of the no coiners and fudsters judge Bitcoin on what's happening today, without the foresight of what could be in 5, 10, 15 years. And I'm sure the no coiners that had a lot of crap to say 5 years ago, they're all thoroughly back in their caves, except for the really brave ones that have popped their heads out.
Hey, we got the Rabinis still going. We got the central bankers still going. But yeah, we are the rat poison. We love it.
Yeah, exactly. So I've noticed you got this perfect competition article now up on your screen share. So I'll ping through those one by one really quickly. But a lot of them are pretty self-explanatory. So the ones that aren't quite self-explanatory, I'll run those pretty quickly. So perfect factor mobility effectively means you can move anywhere in the world at any time. Now, why that? How that applies to Bitcoin is if you run a Bitcoin mine, you can just move anywhere in the world that suits you best. There's nothing stopping you from moving. It's effectively just setting up a new data center in a new country and stacking it with ASIC miners. There are obviously a lot of buyers and sellers in the Bitcoin world, and that is increasing more and more and more. Perfect information isn't that criteria isn't satisfied yet, just because of the disproportionate sort of wealth inequality in Bitcoin. So as distribution continues to go on over the years, the perfect information criteria will eventually be met. And finally, no externalities. So everything in this world has externalities, and at the moment, Bitcoin's main externality is carbon emissions, as a lot of people like to attack Bitcoin for at the moment. But eventually, as global grids become completely renewable, effectively Bitcoin will have close to no externalities. So I can see in 15, 20, 25 years time, it will no longer be a reach to call Bitcoin a perfectly competitive market.
Yeah, this concept of excuse me, this concept of perfect competition is really, really fascinating. I mean, it's almost like a perfect free market that you're sort of describing here, where they're just all the conditions are such that everybody sort of has an equal playing field almost. I mean, not necessarily equal, but equal to the point to where anybody with enough who acquires or accrues enough value can be a player.
Absolutely, and no one's really safe. So one of those other criteria was no barriers to entry or exit. So a lot of people will say, like Bitmain's got such a big chunk of the mining market, it's a barrier to entry, yada 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 yada, all that kind of stuff. But I usually counter that with, there's a lot of money flying around in the ecosystem, and if some young bright kid figures out a new hardware design that completely blows Bitmain out of the water, it's not hard to go raise $100 million to do a preliminary tape out of a new ASIC miner and take over the industry. Like, no one is safe from innovation. Like, there is literally no barriers to entry.
And that's really important. I just want to iterate how important that is, because there's a lot of people that gave Bitmain a lot of credit. Like, there was a lot of people that were very scared of Bitmain sort of taking over the industry, 51%ing, attacking everything, and just censoring transactions, just sort of taking over. But of course, what did we see? We saw the competition come online, and this is something that I was trying to preach for a couple of years. I was trying to tell people for a couple of years to inform them that, hey, Bitmain is not going to be the monopoly that it is forever. There will be more competition. Of course, that's exactly what we've seen, Hass. We've seen competition from all of these people. Canon, and even the main chip manufacturer of Bitmain left the guy and started his own company. So yeah, like you say, Hass, no one is safe in almost any aspect of the Bitcoin network. That's what's beautiful about it in this adversarial game theory type of environment, where nobody's really safe. Everybody's kind of looking over everybody else's shoulder, and that's really sort of allows us to arrive at this equilibrium, this Nakamoto consensus, this sort of flattened environment that sort of makes it so that anybody can compete, but you better be actually competing, because if the second you try to screw over something or do something wrong, your users will leave you, and your competition will take over, and so on and so forth.
Now, in traditional markets where you have hyper competition, there's two ways to stay in business. You can either be a cost leader, which is to have the cheapest stuff, or you can be an innovation leader, which is having the best stuff. In the world of Bitcoin, cost leadership can only get you so far for so long. So, for example, Bitmain is now assuming a cost leadership role for just having the cheapest stuff. But an innovation leader will come along and knock them off their mantle. I can guarantee you. That's just it's just how the world works. So I've noticed you've put on screen now the change in Bitcoin distribution over the years since the last time I had a look at it back in 2015. So as you can see from that graph, things are getting fairer and fairer, and what I see happening, and it's a bold prediction, and I'll be dead anyway because I'm predicting so far out into the future. I'd say
we'll all be dead by 2140, Hass.
Yeah, so I'd say by 2140 or 2100, this graph is going to look like a normal distribution.
Yeah, because because what we see is
skew at the tail, because there will be some people that just want to keep custodial accounts, and if you look through that article, like pretty much, or not even pretty much, every single account that has more than 100,000 coins in it is it's identifiable as a custodial wallet.
Right.
So if you
for an exchange or like a Coinbase, right?
Yeah. Anyone holding custody, and I think I've listed those. Yep, there we go. So yeah, every single wallet that has more than 100,000 coins in it belongs to an exchange or a custodian. And there's a lot of big wallets as well that you just can't identify. It's just not like there's no identifier. And, I couldn't find any for Coinbase, Poloniex, BitMEX, all of those. But I imagine all of those big heavy duty wallets that, have 50, 60, 70, 80,000 coins in them would probably belong to some of these custodians.
Yep, that makes sense. We just had somebody in the chat say that there was, there's some hodlers out there, of course, some old school OG hodlers like Trace Mayer and, and people like that probably have a couple of those wallets with a couple 100,000 coins in it. But we don't want to get, we don't know for sure, but we do know that there are some OGs out there that definitely have some significant holdings.
Yeah, but from ranks 1 to 5, I can tell you it's all custodians.
Yep, and that's what we've seen, and people, and that confuses people too, because they're like, they look at, they're like, well, all the Bitcoin is held by five accounts, and it's like, that's not true. We have to remind people that those are custodial accounts, and they hold coin for millions of people, especially in the case of Coinbase.
And look, it's easier to spout bullshit than it is to refute it. So once these messages sort of get out, they stay out, unfortunately. Huge wealth and income inequality. Bitcoin is owned by 3 mining companies, yada, yada, yada. So, what do you do except try to spread more information, knock back bad ideas with good ideas?
Absolutely, absolutely. So this is more the part 5 is more of the perfect competition. I think we sort of went into that enough. Do you want to go into any more on the perfect competition, Hass, or should we move on to the next?
So this section, so the previous section was just giving an idea of what perfect competition is and what it means, and this section is what it means for organizational decision making.
Gotcha.
So planning, when to buy ASICs, how many ASICs to buy, the race to the bottom, and effectively just sets the principles that whatever the cheapest product is available on the market, I can almost guarantee that the whole industry will need to trend to that, to being the cheapest in the market. So for example, let's say mining company X is selling an ASIC miner for 20 cents per gigahash, and I don't know, 60 joules per gigahash, and everyone else in the market is selling their stuff for double. Perfect competition will tell you everyone selling their stuff for double is going to go out of business very, very, very quickly, and the cheap guy is going to take over the market until somebody cheaper comes after him. And that's effectively the underpinning of my model. It's that effectively you have to assume that within a few months the whole industry will flock to the cheapest product.
Yeah, it makes sense. That's what we've seen. I'm just getting rid of some of this ads here.
So I've seen like a few research pieces of people like trying to size up the market, saying, yeah, there's most likely 60% of the market is Antminer S9s, and 20% of the market is Bitfuries and all that kind of stuff. My approach is all of that stuff is too hard. It's too dynamic to measure. So the only thing you can assume is that every single person on the network is mining with the cheapest stuff. And if they're not mining with the cheapest stuff today, in 2 weeks' time, they'll be mining with the cheapest stuff.
Yeah, that's a good assumption. I mean, that makes sense. People are going to try to get whatever the best cost, return on investment that they can. So getting the best cost average. So that's a good assumption in any economic model for judging, how much it's going to cost to create a Bitcoin.
Exactly. Not only that, you do have to put on more hash power every 2 weeks. So if you were mining with the expensive stuff 2 weeks ago, and now you have to buy new stuff, why would you keep buying the expensive stuff? You just buy the new cheap stuff, and eventually, the market, will trend towards the cheapest rates until there's more stuff. And here's the little table that I like, and this explains away the death spiral. So here we see a little matrix of a couple of scenarios, and what we're seeing now is a decrease in price and a decrease in hash rate. So the only thing that means is that miners are exiting until some are profitable. That's it. So the fact that there's still 40 exahashes of hash on the network means that there's 40 exahashes of profitable miners out there. It's as simple as that. There's no death spiral. It's simple mechanics. Like if the price is going down and the hash rate's going down, that just means inefficient miners are going out of business. And it could also, like, because of the complete lack of data, this could all be related to the games you play behind closed doors when you're not playing the game. So what I mean by that is, you only have to look back, I don't know, it would have been 7 or 8 years ago, when the Saudis just started pumping out as much oil as they could to drop the barrel down to $30, to put the American natural gas frackers under extreme amounts of stress, to the point where they had to turn off their natural gas frack operations. And as soon as they did that, the Saudis held back, oil went back up, and you can't exactly turn on a fracking, you know, mine in a day. It takes a year to get that thing back up and running.
Yeah, man, that's some crazy games, man. That's the macroeconomic game that get played.
The miners toying with each other
Yep.
because the new.
Well, we saw that too, Hass. We saw that recently, like about a month ago or so, maybe two, where we were about to go down, right? We were about to difficulty adjust down, and then at the last minute, somebody put on some hash power and staved off the difficulty adjustment of going down.
Because the thing is, we've got the new 7 nano architecture units coming out. So I think Antmine is starting to ship their stuff in a couple of weeks in late December, and it could just be them, you know, happily taking a short-term hit to squeeze everyone out, and then in a couple of weeks the hash rate might go up to 80 exahashes because all of their new kit is online.
And it's not just Bitmain. I mean, we have 7 nanometer miners just like coming on like crazy towards the back half of this year, right?
Yep.
Yeah, so that's going to push it back up, and of course we're still looking for, you know, a bear market until next summer or so, until June, July, August, when we can sort of pass over the 30-day moving average. But until then, we're expecting, you know, more hash rate to come online. We're expecting the price to still kind of remain in the bear market, but eventually, you know, this equilibrium just continues to get reached. Like you say, Hass, only a couple of the difficulties epochs, right? Like only like 3 or 4 difficulty adjustments, and things tend to go back to equilibrium.
Definitely, because it happens all so quickly. Mines can be turned on and turned off at the literal click of a button.
And that's pretty fascinating too. We've never seen anything like that in the history, really, of mankind. When you're talking about global, big, huge markets like oil and gas and electricity, these types of things, we've never seen anything that can just be turned on and turned off so instantly, like you can do with Bitcoin mining. So that, of course, affects the macroeconomics and affects the price. So they're very interesting stuff.
Oh, definitely. So you know, with my background in civil engineering and mining, like it takes 5 years before you know 5 years of setup before a single bit of gold ore is pulled out of the ground. Like it takes a long time to set up a mine, and then it also takes you 5 years to get out of the mine as well. By the time you've done all the decontamination, rehabilitation, like you know, the competitive strategy works just like traditional commodities markets, but the speed and the dynamics are on a whole different level.
Instant stuff, man. And that's what, of course, we've seen as a trend, you know, in general with information technology, just speeding up the world like crazy. So I think we can get into the next part here, which is going to be the inputs. I believe the environment. Let's do the economic inputs first, and then we talk about the environmental inputs after that.
Yeah. So the economic inputs. There are a couple of things that you need to consider. So there are about 7 things in total. So the first thing you need to consider is, you know, who's actually mining. So effectively, you got to try to figure out a broad average network mining mix, which is effectively almost an impossible task. So you've just got to you know, make strong, robust assumptions where you can. So in terms of, you know, who the average miner is, you've got a couple of categories of miners. So you've got the chip fabricator industry giant miners. So your Bitmains of the world, your, you know, Canaans, Bitfury. You know, who else is there? You know, KNC. Just the people that fabricate their own equipment and mine with it. And then you've got the big end of town retail miners, the people that are buying, you know, Avalon cold boxes that, you know, come like, you know, they're a petahash each or whatever it is. And then you've got the hobby miners that, you know, just have, you know, 20 or 30 ASICs sitting in their garage. So the only thing you can really do here is try to look at network statistics, size up, you know, mining pool sizes, and sort of lick your finger, stick it in the air, and come up with an assumption. But Effectively, what I've assumed is that chip fabricators make up a very large proportion of the hash power, and I'd say that the chip fabricators themselves provide at least 1/3 of all hash power on the network, which is a pretty large chunk considering it's only 3 or 4 entities. The remaining 65% goes to all your large and small retail miners. So that's how we work out averages and the like. So once we worked out who the network average miner is, we can work out what the network average dollar per gigahash figure is and watt per gigahash figure is. So from there, you can assume that all chip fabricators are making big profit on their mining rigs. So there is publicly available data of a public Israeli-Canadian firm called Bitfarm, which shows that they typically make about 60% profit on their hardware. So that effectively means they're getting a 60% discount on RRP on whatever your dollar per gigahash figure is. And they don't really save. Everyone pretty much has the exact same watt per gigahash figures.
Well, let me ask you this real quick, Hass. On that note, do you have any idea what the percentage of the miners are or that are using like renewable energy as opposed to like just the grid?
Well, apparently some research came out the other day, and the number 78% was thrown around.
That is actually using renewable energy.
Yeah,
that's kind of high. That seems kind of high to me, but I mean that makes sense to eventually get to that number.
Eventually, yes. I think that's a huge stretch, that number. So I use 12% in my numbers simply because that's just the world average.
Oh, okay, that makes sense. Yeah, the world
and
average.
You can research as much as you want, but it's an industry shrouded in mystery. And even as a researcher, if you call up one of these miners and ask them how much they're paying for electricity or where they're getting their electricity from, they'd be pretty silly to share such information with you.
Yeah, because obviously that's a lot of times their competitive edge.
Basically, it's their sole competitive edge.
Yeah.
So, or that and being able to acquire, hash for cheap. So as a chip fabricator, you're getting it at the absolute cheapest price. So that's the first main economic driver, is who's mining and how much they're paying to mine. The second driver is how much new spend is coming online every 2 weeks.
So that's the hash rate and capex that we're on.
So you've got two things that make up the cost to mine. So you've got your capital expenditure and what you have to spend on new mining hardware every fortnight, and then you've got your OPEX, which is powering these miners and keeping them cool. So again, it's the driver in this situation is the board of directors of a mining company sit around the table and say, how much hash power are we putting down this week? And effectively, all they've really got to go on is using historical figures to do forecasting. The best forecasters will make the most efficient buys and make the most money. So some people can overbuy hash rate and end up in a bad situation, and some people can underbuy and be in a bad situation.
So some people themselves might end up in a bit of a spiral if they did not plan accordingly.
Exactly. So if you overbuy capex, and then in 2 weeks' time, a new generation of miner comes out, you'll go bankrupt.
Gotcha.
So there's that. So there's another thing: your ability to predict and make good decisions on capex. The next one is your operational expenditure. So it's effectively how much electricity you use and how much you can buy electricity for, and how good your air conditioning systems are. So there's another facet where competitive advantage is built and grown. Thirdly, is the amount of coins that you're bringing in. So a lot of people tend to forget about mining fee revenue. So everyone's like, yeah, 12.5 coins every 10 minutes. That's what the miners make. But on top of that, there's quite a bit of fee revenue involved as well in these calculations. And if you underestimate the fee revenue or overestimate the fee revenue, you'll also be in a bit of a bad spot as a miner. So there's an extreme amount of science and business strategy that has to go into this, and no big successful miner gets there out of luck.
They make their own luck, isn't that right, Hass?
Absolutely right. Absolutely right. So back in the old days when I did my study back in 2014, the fee market was effectively non-existent. But now we're starting to see it heat up. In the past few months, it's come down a bit because obviously in bear markets, network activity tends to taper off a little bit. But as you can see, when there's hysteria, like in 2017, your average daily fees were almost as much as the reward. So the amount of fees the miners were generating was unbelievable in late 2017.
And that's what we've seen here. We've seen them, like you say, getting hundreds of coins here in fees, and that's of course been tapered off since now we've implemented technologies like SegWit to be able to deal with that. And of course we have the Lightning Network. But really the biggest thing of all was just the companies batching. Like just batching their transactions saved the network huge amounts of fees. So that was the number one thing, was batching. Then we have SegWit, and now we have like some of these efforts in the community to educate these companies so that we don't have to go through that same problem again. So we have companies and that's not a company, but we have groups like Bitcoin Optech that I highly recommend everybody check out and follow and check out their newsletter. We have people like those people that are going to businesses and helping them and educating them and making sure that they are following best practices, that they are doing the most optimal ways of using Bitcoin, so that we can as a network save on fees and make sure that the network itself is running as best it can, right, in the best health that it can.
Absolutely. So but as you can see, the more you dive into this kind of stuff, the more you can see how impractical it is to buy an ASIC miner and run it in your bedroom. Like this is there's some serious complexity involved in all of this.
Absolutely, and not just software wise, but hardware wise too. Like Tone Vase likes to tell people all the time, and because he's tried to set up a miner himself, that mining is very specialized, very difficult. It's not just okay, I'm just gonna put $10 million into a mine today. It's it's you guys. Lots and lots of planning and lots of setup, and but eventually once you have a mine, you can via software just kind of turn off and on machines with the click of a button once it's all actually set up. But we've seen mines, pretty big, huge mines, like we're talking hundreds and hundreds of yards. We've seen those set up in a matter of a month. Like in a matter of weeks, we've seen those set up in China. Back in 2015, we've seen some mines go up pretty quickly. So it is pretty still amazing how fast you can pop up a miner. But again, this takes huge amounts of electricity. The only way to remain competitive in mining today is to have some type of advantage in electricity. And of course, to do that, you either have to own the electricity or you can use some, more natural resources, to do it, but you have to have an edge. What we're seeing in the United States is a lot of people are using rivers, right? Hydro, electricity to be able to power Bitcoin mining, because they're doing deals with various cities and things like that. And that seems to be one of the most efficient ways to power a Bitcoin mine is hydro. And but we've seen people use geothermic though as well, and so it's going to range. But Nick Carter I like the way Nick Carter describes it. He basically says that if you think about Earth topographically, and then you pour water over the top of it, right? All the water will sort of seep into. If you think of water as Bitcoin, like Bitcoin miners, the water will seep into where it's lowest, right? Wherever the cost is lowest, and that's gonna seep all across the world. So there's going to be places all over the world that are going to be incentivized to mine. It's not just like the big countries.
And that's because of the perfect factor mobility that the industry provides. Like
Absolutely, absolutely.
you can literally move overseas within a day or two. So obviously you won't be, putting all of your miners in a container ship and shipping them overseas. You keep them online until they're worthless, and in the meantime, you just set up your data center overseas and do a seamless transition.
And we have seen many miners actually move out of China recently with their regulations, their sort of draconian regulations that they brought down on there, which was going to be expected. But we've seen them do that, and so as a result, we have seen miners move more towards the U.S. and Canada and Japan, actually, as well. Japan, U.S. and Canada,
and to colder climates as well, because one of the other energy competitive advantages is in your cooling.
Absolutely.
So, he who cools best wins. So cooling, is typically anywhere between 20 to 30% of overall, power costs in a data center, and that just applies to like servers and server racks. So the heat density of ASICs is actually far higher.
Well, let me ask you this. Let me ask you this, Hass, because here's what we've heard, and let me see if you've heard this too. We've heard that people, that miners now are actually in the 2015 era, miners pretty much didn't care about the heat. They just like fanned it out, right? But I think what we're seeing now is miners actually beginning to reuse their heat.
Yeah, and apparently my Canadian colleagues, they're quite gung ho on this. So a couple of I think one of our captains of industry, Francis Pouliot. He's doing a lot of work in waste heat from Bitcoin mines over in Montreal. So I'm really excited to see where that's going to take off in the future.
Yeah. Shout out to Francis. We have him on the show. He's on the network all the time. We have him on basically every episode of the Bitcoin News Show. He volunteers his time, and so we really have had a great time with having him on the network for a long time. We actually even, I think we have his picture on the website, CryptoCast.network, because we love him. We love the work that he's been doing, and I really recommend everybody, if they get a chance, to follow. Oh, there he is, Mr. Francis Pouliot. I really recommend everybody to go ahead and follow him. He's doing a lot of great work with Bitcoin, specifically these days with CipherNode, the software project that's going to be really interesting. So I recommend people check that out. But we got sidetracked. So back to you, Hass.
So yeah, that's basically the economic inputs. So it's plucking some. There is quite a bit of number plucking, but those numbers are able to be plucked because of the principles of perfect competition.
Yep, and I'm going to read what you say here. I really like this quote. You say, mining equipment will exponentially increase in processing efficiency in line with Moore's law for at least another 5 years, and then exponentially increase in power efficiency with Kumi's law for at least another 25. So it just, again, just no death spiral in sight when you're looking at these types of percentages, when you're looking at these numbers, when you look at the increase in difficulty just in the past couple of years, it's kind of like staring into the sun. Like there's no shortage of people that want to make a profit from this network. And of course, this network is online 24/7, accessible to anybody with an internet connection, and soon anybody with just a satellite connection, because of course we got work from Blockstream over there doing satellites and stuff, so that's gonna be really cool. We got people like Gotenna doing local broadcast mesh networks for Bitcoin, and you're just not gonna be able to just stop Bitcoin. It's gonna keep on going. So that was the economic inputs and drivers. Let's see, I think you have one more, which is the environmental inputs and drivers. So let's go with that next.
So on the back of all of those economic inputs and drivers, we can size the market up. Again, I made the point that I just took the easy way out and just rationalized the entire market in the number of at the time the industry leading product was the Antminer S9i. I think it was, or the S9J. So I just rationalized the entire network into so and so many million S9Is running at once, and then just multiplying that out, multiplied by its wattage rating, adding some cream on top for air conditioning, and that was the That's the environmental impact. So you work out how many terawatt hours you get out of all that. You multiply it by the world average grams of CO2 per terahash. So sorry, per terawatt, and off you go. That's very easy to find your environmental impact.
Very, very interesting. I just want to see here something you said. Okay,
So
yeah,
yeah,
because you said here, I just want to go over the 9 different. I think this was 9 of the different ways that you calculate this. So that you have the hash rate, the
yeah.
capex, the
Mm-hmm.
opex, the
Mm-hmm.
difficulty cycle, coins mined, power cost, emissions, and then the mining mix. And that's essentially how you calculate the economic
Yep.
model. Is that correct?
Yep. And
Okay.
then once you've done the economic model, the environmental model is easy as breathing.
Gotcha, gotcha.
So,
And one more time, what was the environmental model?
so basically, let's say I'm just going to use nice round numbers. So let's say today there's 40 exahashes of hash rate on the network, and then you've got the industry leading miner is I don't know, a 40 terahash one. So you have 10 million of those miners running on the network. These 10 million miners had an energy impact to produce, and now they have a running cost to run and a running cost to cool. You work out from there total energy in terawatt hours, and you just multiply that by the world average carbon emission per terawatt hour. Sorry.
Gotcha, gotcha. And so here we have the CapEx. We're screen sharing on the final part of the article here, pretty much, which is the calculating the costs.
Yep.
Got the CapEx, the OpEx, and the total. And of the video that we're sharing here, screen sharing, saying that was from before, was a few months back. That was saying that the total to mine a Bitcoin at that time was 6,150, and I think the price of Bitcoin at that time was around 8,000.
Yeah, but 2 days later it dropped down to 6,200.
Yeah, that's funny. So we have all the calculations here. I really recommend everybody check out these graphs that we're sharing here to be able to calculate.
Orange boxes are the inputs.
Ah, gotcha. So let's go back here. So we got the orange boxes for the capex here,
Right, so
and
all of
then
those
for the
boxes are your
opex.
assumptions. So you can build this spreadsheet out yourself and just play around with the assumptions. But happy to share the spreadsheet.
Yeah, we're about to do that too. So we actually have a spreadsheet for you guys where Hass plugs in real time, guys, some statistics, and then runs it through his model, and then we actually can get a rough price of what it costs to mine a Bitcoin. So we'll screen share that in a second. Is there anything else you want to go over in this past page here, this very last page of the actual costs?
Oh, I think
specific?
that's about all in terms of that. So maybe we can show this model in action.
All right, let's do it. So I'm screen sharing Hass's screen now. You guys can check that out. We have the Excel up, and Hass, go ahead and describe it for us.
Let's just do it live. Let's just go check out what Bitmain is doing an S9 for these days.
All right.
And I'll plug it in real time.
We're going to calculate real time, ladies and gentlemen, the cost to mine a Bitcoin with Hass's model.
Okay, so an S9J with a power supply, $379. Great. So $379. I'm going to leave all of my assumptions identical. The hash rate is not 51 exahashes anymore. I think it's somewhere around 40 now.
Yep, dropped a little bit there. We lost 15% just recently.
All right. So as you can see, there's your mining cost. Can someone pull up the price on screen, see how we're tracking?
Let's see. Yeah, just open a new tab. See what we got here.
There you go, 39.23.
Okay.
So not too far off. So I've been running this model for a good 7 months or so, and it's been extremely reliable.
So what does it say? Just so for the people who for the audio listeners, what if you want to read out some of the stats here?
So the estimated total average cost to mine a Bitcoin according to my model, based on today's hash rate and how much you can pick up a S9J for, is $3,844, which is tracking in line with the price. But that is based on the assumption that the difficulty is increasing by almost 6% every fortnight. Now, we know this isn't the case. We've seen it drop quite a bit. So let's have a look at what happens. Let's say if we put the increase, I don't know, at 3% a fortnight. That'll give you a mining cost of $2,961. And one of my very dear friends, Aztec, who you can follow on Twitter at AztecBTC, he's picking a bottom of around $2,800 per Bitcoin. And a lot of people will probably gag when they hear such figures, but it's something that could very easily and realistically happen.
Yeah, shout out to Aztec for sure. I follow him on Twitter as well. Lots of great tweets. So there you heard it first here, ladies and gentlemen. The cost of mining a single Bitcoin, and it's really interesting. Again, guys, I recommend everybody check out Hass's work. He's got a whole academia paper on this. He's got articles, and he's even got a video series. So if you guys don't want to read the article, he's even made it simple to have a video series. So they're 3 to 10 minutes long. Just check out those videos. Really, really great. They're really, really quick. And if you put the speed on like 1.25 or 1.5, you can even get through them faster. So lots of great information in those. And again, highly recommend everybody check out Hass's work. He's been in the Bitcoin space for a while, and there's a lot of great work here. He's got other articles as well on his Medium page, and I believe you write all the time these days, Hass. So lots of great articles on there. Really highly recommend everybody check them out. So let's just close this out, Hass, with maybe just some macro questions. Basically, where do you see? Let's ask first. Where do you see the future of mining going in 2019? Let's go short term. How do you see the mining play out versus the price in 2019?
They're going to dance around each other in a constant search for equilibrium. It's basically as simple as that. Some people are going to, figure out their capex and opex better than others and make more money, and others aren't going to figure out, and they're going to turn their kit off. I expect hash rate to boom quite soon without the price increasing, and that's simply because dollars per gigahash is going down and watt per gigahash is going down. So during the bear of 2014 to 2017, you saw it yourself. Hash rate went up 100 times with the price not going up $1, just simply because dollar per gigahash, kept going down.
Yeah, so, and we saw it over and over again. It just, everybody was kind of tripping out a little bit. It just kept going up and up and up and up and up. And now, of course, we can sort of see why. We look back, hindsight 2020, we sort of see the economics of what went down and why that went up.
So yeah, that's how I see it. It's a game of supply and demand as well. If people don't want as much Bitcoin, the price will go down.
How about this? Hass? Maybe we can get some price predictions from you for next year. What do you think? When do you think? How low do you think we're going to go? And when do you think? Roughly, approximately, when do you think the bear market's going to turn around? When do you think we're going to cross over that 30-day moving average? I put him on the spot. Ladies and gentlemen.
Being a survivor of the 2014 to 2017 bear, I reckon we're not going to have too many moments of joy until about the halving in 2020, I'd say. Yeah. Because if you look at it, from a fundamentals point, $4,000 Bitcoin is actually it's amazing.
I still think it's amazing. People don't understand. If we would, here's what's funny, of course, and this has been talked about. But look, if we never went to 20,000, if we just ticked up to 4,000, right now everybody would be ecstatic. But of course, we went from 20 to 4, so now everybody's tripping balls. But that's just the reality of the situation.
It's the FUD spiral. It's even though 4's amazing, it didn't need to be 4. I reckon the fair price, or what I thought, well, it doesn't really matter what I think is fair. It's what the market thinks is fair. But I think those 3 or 4 stable months at around 6,000 felt fair.
Yeah, absolutely.
It felt like
Absolutely. And I
the
think
of a $150 billion market cap company.
yeah, really,
But
I think we're fair right now, like around 4 or 5. I mean, that's pretty fair for what we're doing. But of course, come at this time next year, when we have all sorts of, when Lightning is even more mature, when Wall Street has their a bunch when we got Fidelity and back when that's all has liquidity running into it and proven to work, I mean, that's a whole nother situation. That's a whole nother thing. Bitcoin should be worth much more at that point. But it's very interesting to see that these people with these short-term mindsets and these high time preferences, they're not going to be able to get it. So Hass, just really appreciate you coming on the show. Let me just give you just a platform to close it out for us, and let us know where can we find out more about you, and I'll just let you close it out. Go ahead.
Yeah, just hit us up on Twitter at Hass McCook, HASSMCCOOK, and I'll throw up all those links and everything you need to see right now.
Yeah, and of course, I have all the links, guys, in the show notes below, so make sure you check that out. I got all the links, the academia page, the video page, and the page to the article, and of course, Hass's Twitter account, so make sure you follow him, guys. Really great guy. Really had a great time. Thanks again, Hass, so much for coming on the show, man. We had a lot of stuff to talk about. I wish we could have talked about more, but that's a pretty long article, and again, guys, check that out. Lots of great data. And of course, guys, we'll be here all week. We have more shows here on the CryptoCast Network to come. I'm going to be doing a show on Wednesday. I think we have a Deciphered on Wednesday. Then we got the Crypto Q&A on Thursday. I think we're releasing a Bitcoin Matters on Friday. And then, of course, Sunday, guys, we got the Bitcoin news show as always. So thank you guys so much for joining. Thanks for everybody in the chat. Thanks for everybody in the comments. We really appreciate it. We hope to see you guys back here again. So until next time, please, guys, keep talking Bitcoin, and we'll see you later. Bye-bye.